So I have a prequel to this, check it out. It basically goes over why you should go into small business as a man or someone being discriminated against. However, there is an additional factor which applies to specifically MGTOW, namely the effect on your tax liability. There are several things that MGTOW have a tendency towards that are not immediately apparent or obvious. Two of these are minimalism, basically due to the fact that bachelors who are not interested in impressing women can get by on remarkably little, and hobbies, since what else are you going to spend all your newfound money and time on? So I'm sure you figured out by now that I'm also trying to push something else into that list, namely small business. But before that, I would like to point something out. As a MGTOW, you have necessarily vowed not to support women, with the exception of prostitutes in the case of some MGTOW. You do not take women out on dates or buy them gifts, nor do you marry them and allow them to take half your stuff in a divorce. However, women have another way of taking money from men, through the government and taxes. This effect is somewhat mitigated by the fact that MGTOW are frequently minimalist, but you still need to pay taxes. Furthermore, your hobbies are often quite expensive. The fact that you are spending money on hobbies necessarily means that you have earned that money through an income, the taxes of which are going to women. Even if you don't have expensive hobbies, chances are you still have an income, one that you are being taxed on. Now, I would like to go over two things. Firstly, how to minimize your taxes overall, and secondly, how to not pay taxes on the income used to fund your hobbies. But before that, I'd like to make a disclaimer. Tax evasion is illegal. It means not reporting your taxes, reporting things wrong on your tax return, etc. This is a crime, and you can't go to jail for it. However, tax avoidance is the act of reducing the amount of taxes you had to pay through legal means. This often has a negative connotation, but it's actually built into the system. For example, the government will often give you a tax break when buying real estate, and the way this manifests is different depending on what country you're in. Thus, buying real estate with the tax break as part of the motivation is a form of tax avoidance. DIY is also a form of tax avoidance. You have the choice between working, earning money, and using that money to fix your car, or simply fixing your car yourself. If you work, then you get an income, which is being taxed, and that gets taxed again when you pay the auto mechanic. If you fix the car yourself, the government does not get a cut. You could even argue that minimalism is a form of tax avoidance. The less you earn, the less you're taxed. So now that we have that out of the way, now I'm going to talk about how taxes work for a business. Tax laws in pretty much all countries state that businesses are taxed on profits, not revenue. Now this is important. The reason is somewhat subtle, but it basically amounts to this. You have a business, say, wrapping gifts. You buy the gift for $99, wrap it, and then sell it for $100, meaning that you have a value added of $1. Should the government tax you on the $1 profit, or $1 value added, or the $100 revenue? Now, I'm sure we can tell that if you tax on the revenue, then it basically renders a lot of small businesses obsolete. And if you think about it a little bit more carefully, then it basically results in what are called vertical monopolies that I'm not going to go into. This means you can write off expenses. Namely, for every dollar of cost you incur, that is one less dollar of income that you pay taxes on. Now here's where it gets tricky. The system is not optimized to account for all the costs of doing business. However, if you run a small business, then you get to account for all the costs. Now, what does that mean? Well, let me give you some examples. As an employee, you drive a car to and from work. Do you write that car off? Do you write off all the tools you use to fix your car? Do you write off the gas you use when you're driving that car? You probably have a home office complete with stationery and furniture and the like. Do you write part of your home off and all your stationery? You use your internet, your phone, your computer to communicate with your employer, to find jobs if you don't have an employer. Do you write that off? When you go out to eat lunch with coworkers, you discuss work. Do you write that off? Now, let me explain what's going on. There are a whole bunch of incidental costs that you incur as an employee. A lot of these costs serve dual purpose roles. For example, your car. These are legitimate business expenses that eat into your profit, i.e. your salary. However, you cannot write them off because the company that hires you is going to be unwilling to acknowledge that it is a business expense. If it does acknowledge that it is a business expense, then it will be forced to pay for something that they don't even know if it is truly a business expense. For example, you could just be driving your car to have fun to the movie theater, for example. But as a small business owner, you know that these things are business expenses, and you can write them off. So you need to ensure that you do not pay more taxes than you should be paying. Now, let's look at hobbies. These don't seem like business expenses, but actually they can be. Enter the business venture. Say you have a hobby. The hobby only drains income. You should be attempting to monetize the hobby by turning your hobby into a business venture, or at least on paper. Now, I stress, only turn the hobby into a business venture on paper. In your heart, it should still be a hobby. But if it is a business venture on paper, then you get to write off the loss incurred by the hobby. So instead of gaming as a hobby, attempt to generate revenue by streaming, or by using the gaming footage as the background for a YouTube channel that you collect ad revenue on. Instead of traveling as a hobby, start a blog, and attempt to generate revenue through that blog. If you get money, great. If you don't, you can still write off the losses from the rest of your business. Now, there are two business concepts I want to introduce. A lot of businesses diversify. Now, I'm sure you know what diversification means in the context of, say, portfolios. Now, in this case, this means that even if the main part of a business is profitable, a lot of the time, businesses have business ventures on the side, which may be losing money right now, but from which they hope to gain money later on. And what they do, they use the profits from one part of their business, and they use that to pay the expenses from another part of the business which is currently not yet profitable. In this case, your hobby would be the part of your business that is not yet profitable, but which you hope it was profitable later on. And the second concept I'd like to introduce is cost centers and profit centers. A profit center is obviously the part of a business that generates income, for example, sales. But a cost center is a part of the business that costs the business money, but are necessary to keep the business running. For example, research and development, marketing, IT. Your hobby probably either falls into the category as a side venture or a cost center. For example, I'm running an engineering consulting firm of one person myself. As an engineer, I have hobbies, specifically hobbies building random things. The problem is my hobbies are incredibly expensive and cost a massive amount of money in materials. However, if my projects go well, I usually end up attempting to monetize them and sell them later. And even if I can't monetize them, I almost always put them on my portfolio to show off my skills to potential clients. So this means that my hobby is usually either an R&D expense for a business venture that I hope to make money on later on, or a marketing expense. Of course, in this context, a hobby basically means a job that you enjoy. Now, as I'm sure you can tell, the problem is you need something to write these off against. If you get paid via a W-2 as an employee, there isn't much you can do. However, if you own a business, or you get paid via 1099 as an independent contractor, meaning you basically own your own business, it's just a service business, then this option is open to you. So my message to MGTOW, run a business, ensure that you write off all your business expenses, not just the ones that most people write off, but including your travel expenses, your internet, your electronics, and convert your hobbies into business ventures and write those off too. And cut out the opportunity for women to use the government to reach in and take your money.